YMAX ETF, Unveiling the Strategies and Risks of Income Through Options. Investing for consistent income can be a strategic dance, especially in volatile markets. Exchange-traded funds, ETFs, have emerged as potent tools for diversification and access to specific asset classes. Among these, the YMAX ETF YieldMax Universe Fund of Option Income ETFs stands out with its focus on generating monthly income through an options-based approach. But is YMAX the right fit for your investment goals? Let's delve into AQA format to understand its inner workings, weigh its benefits and risks, and ultimately decide if it deserves a place in your portfolio. What is the YMAX ETF all about? YMAX is an actively managed fund of funds ETF. This means it doesn't directly invest in stocks, bonds, or other traditional assets. Instead, it holds shares of various underlying YieldMax ETFs, each employing a covered call strategy on specific securities. This strategy involves simultaneously buying the underlying asset, stock, and selling a call option on it. How does the covered call strategy work for income generation? Covered calls leverage time decay and potential upside in the underlying asset. The call option grants the buyer the right, but not the obligation, to purchase the stock at a predetermined price, strike price, by a specific date, expiration. By selling this option, YMAX receives upfront premium, boosting its immediate income. Additionally, if the stock price stays below the strike price by expiration, YMAX retains the stock and any dividends it pays out. What are the potential benefits of investing in YMAX? 1. Consistent monthly income. The covered call strategy aims to generate regular income through the premium received from selling call options. This can be attractive for investors seeking consistent cash flow, like retirees or income-focused portfolios. 2. Enhanced risk mitigation. Covered calls limit potential upside, but can also provide downside protection. If the stock price falls, YMAX retains the stock and avoids significant losses compared to owning the asset directly. 3. Diversification across underlying assets. YMAX doesn't hold a single stock, but rather invests in diverse underlying YieldMax ETFs targeting different sectors or asset classes. This can spread risk and offer broader market exposure. Are there any drawbacks or risks associated with YMAX? 1. Capped gains. By selling call options, YMAX forfeits potential profits if the stock price rises above the strike price by expiration. This can limit total returns compared to directly owning the underlying assets in a bull market. 2. Higher fees. YMAX carries an expense ratio, management fee, higher than traditional ETFs, as it involves actively managing the portfolio of underlying YieldMax ETFs. 3. Complexity and potential lack of transparency. The fund of funds structure adds a layer of complexity, and investors may not have direct visibility into the specific holdings of each underlying YMAX ETF. Is YMAX right for you? Ultimately, the suitability of YMAX depends on your individual investment goals, risk tolerance, and time horizon. Consider these factors. 1. Income needs. If consistent monthly income is your primary objective, YMAX can be a good option. However, remember that income may fluctuate due to market conditions and option premiums. 2. Risk tolerance. YMAX offers downside protection compared to owning individual stocks, but it also caps potential gains. If you prioritize capital appreciation, traditional ETFs or direct stock ownership might be more suitable. 3. Investment horizon. YMAX is typically recommended for long-term investors who can ride out market fluctuations and benefit from the consistent income stream. Short-term investors may be better suited for more liquid and flexible options. What are some alternatives to YMAX? Several alternative investment options can offer similar income-generating potential. 1. Dividend-paying stocks. Investing in high-quality dividend-paying stocks can provide regular income through quarterly or monthly payouts. 2. Fixed income securities. Bonds and other fixed income instruments offer predictable income streams based on predetermined interest rates. 3. Covered call strategies. Implementing covered call strategies directly on individual stocks can offer similar exposure to YMAX, but requires ongoing management and market analysis. How often does YMAX pay out distributions? YMAX aims to distribute income monthly, providing investors with a predictable stream of cash flow. However, it's important to remember that the amount of the distribution can vary depending on the performance of the underlying assets and the premiums generated from selling call options. How does YMAX compare to other actively managed ETFs? Actively managed ETFs, like YMAX, carry higher expense ratios compared to their passively managed counterparts. This is because they involve ongoing management and decision-making by portfolio managers. While YMAX boasts its focus on income generation, its performance over the long term should be compared to actively managed ETFs with different investment strategies to assess its relative value proposition. What are the future prospects of YMAX and options-based investing? The success of YMAX will depend on the continued effectiveness of its covered call strategy and the performance of the underlying assets. In volatile markets, the income generation potential of covered calls might become even more attractive. However, regulatory changes or shifts in market dynamics could impact the viability of this strategy. Staying informed about market trends and actively monitoring the performance of YMAX is crucial for long-term investors. In conclusion, YMAX offers a unique approach to generating income through an options-based strategy. While it presents attractive features like consistent monthly distributions and downside protection, investors should carefully consider the potential drawbacks, including capped gains, higher fees, and inherent complexity. Understanding your individual investment goals, risk tolerance, and alternative options is crucial before making an informed decision about whether YMAX deserves a place in your portfolio. Thorough research, ongoing monitoring, and if necessary, consulting with a financial advisor can help navigate the intricacies of income-focused investing and navigate the potential of YMAX as a valuable asset within your broader financial landscape.